Hey guys, Max here, and we just saw another very strong day for Western markets. US equities in particular rose loads, and really it all comes down to the Federal Reserve, to Jerome Powell and interest rates, and the fact that there is a secret mandate by the Fed to maintain high asset prices, and in reality, they do not care about inflation at all. Of course, we got this update from the Fed yesterday, and it pleased investors, and sentiment is very strong on the back of it, and we will discuss all of that in detail. But first, what actually happened in the indices? Well, US equities exploded upwards. The S&P 500 rose by 2.2% for the day. The Nasdaq rose by 3.7% and the Dow Jones rose by 1.5% too. European markets also saw some major gains. The FTSE 100 was up 1.5%, the Stoxx 600 was up about 3%, and over into Asia as well, China's markets rose too. The Hang Seng index rose 6% that day alone. That was crazy irrational. We spoke about that yesterday in detail if you want to know why, but basically, the CCP is claiming to no longer be an authoritarian dictatorship. They claim that they now care about investors and they want to help these companies grow instead of trapping them into a box and stealing money from them. Basically, the CCP is tricking investors into putting their money back into Chinese markets when it's very clear they will not actually change and they will destroy that wealth before long, so please don't fall for those traps. All over the world then, the markets were strong. The MSCI World Index, which tracks every country's stock market weighted to its size, was up 2.9% over one day, so very strong results. Now, in the world of foreign exchange and currencies, the dollar actually fell almost 1%, probably on fears that inflation will continue to rise for the future, for long into the future actually, as the Fed is being very dovish. Now, outside of that, there were no major moves. In the world of risk-off assets, with bonds first, there was another rise in yields across the board. The US 10-year Treasury was up 3 basis points and now sits at a yield of 2.18%, the highest in over 2 years. And the German and British yields for their 10-year bonds were up 6 basis points each as well. Now, why is this? Well, very simply, because inflation is soaring and interest rate hikes have finally started, so it's very natural that we see yields on debt get more expensive. This is fully expected. Now, gold prices held steadily with no major moves in either direction, which is a little bit surprising to some people, but there are two forces at play here which counter each other. There is high inflation, which is good for gold, and very low interest rates, which is bad for gold, so it's not too surprising to see it stagnate a little bit. In the long term though, I'm still quite bullish on gold. Finally now, as always, we're going to talk for a moment about oil prices, which are hugely important right now. Thankfully, there was another day of declines, with WTI crude oil losing 1.4% per barrel, which now sits at $95, still far higher than we'd like to see it, higher than is ideal, but far less dangerous than $120 a barrel is. Now, Brent crude oil, the standard of oil in Europe, is a fair bit higher. It's more impacted by the Russian lack of supply due to the war in Ukraine, so prices are still sitting at $103 a barrel, less appetizing for sure. Now, actually, regarding oil, I will put out a separate video later today explaining what's going on with oil, particularly in regards to the war in Ukraine, with Russia becoming sort of a pariah state and Saudi Arabia going against the US as relations start to sour, so look out for a video on that later today. Finally now, for the crypto markets, they are moving again as well, up a little bit for the day, mostly a few percent. Bitcoin actually didn't move much at all, up 0.5% only, sitting just above $40,000 right now. Ethereum moved up 4% and it's now sitting at $2,800 each. Most altcoins were up more, actually 5 to 10%, somewhere in that sort of range. AVAX from Avalanche was actually up 13%. Basically, the crypto markets are bullish in general. Risk appetite is strong all over the world with this very dovish Federal Reserve. Interest rates rose, but by a small amount, and the fears surrounding the Fed raising by way more than 0.25% a month are not too strong right now. So it's quite natural that we see the crypto markets move in the same direction as other risk-on assets as expected. I'm not particularly sure why Bitcoin didn't move up with the rest of the market. Maybe there was selling pressure at the $40,000 mark holding it down. Maybe technical analysis traders are finding some other resistance and dictating its price. If anyone has an idea as to that, let me know. I do know that Ukraine just put out a big bill legalizing crypto, but that's probably priced in. The government has been using crypto itself and seemed very pro-crypto for a while now, so no surprise there. So the big news today was obviously that the Federal Reserve came out and gave the decision on interest rates for this month. Now, we were either going to see a 0.25% or a 0.5% rate hike. Opinion was swaying back and forth on it over the last few months. Before the Ukraine war kicked off, it seemed likely to be a 0.5% hike. Inflation is terrifyingly high, and interest rate hikes are the only real way to bring inflation back down right now, so we expected and actually needed to see the Fed take a strong position on this, raise rates quickly and hard to actually tackle inflation. The Ukraine war terrified markets though. It sent them down, obviously, as we all know. People got more worried about a recession and energy price spikes and things like that, so the narrative changed overnight. Suddenly, the Fed and lots of other people started hinting that they wouldn't be raising interest rates by 0.5% because it would have too much of an impact on asset prices. By the time of yesterday, the markets were pretty sure we'd see only a 0.25% raise, which wasn't guaranteed, so the markets were still a little bit anxious. Then we got the news, and the Fed has announced that they will raise the federal funds rate by 0.25%, the lower of the two options. Now, very quickly, I have seen some confusion here because they raised the rate to 0.25 to 0.5% because they actually have a range of rates rather than one specific rate, but we don't really talk about that too much because it just isn't too important. We take the lowest point in the range to be the interest rate set by the Fed, even if it doesn't technically work like that. So when rates were at 0, they were actually from 0 to 0.25. Now they're at 0.25, they're actually from 0.25 to 0.5. Now, markets boomed on that news. They are super happy because of the two options. It's the best one for asset prices. The markets were scared of that 0.5% hike, and that would mean that the Fed would actually be hawkish and willing to fight inflation. But instead, we saw once again Jerome Powell fail to do his job and refuse to make the necessary hard decision. It's now pretty clear in my mind that he will go down as one of, if not the worst Fed official in history, probably the worst, let's be honest. First, by refusing to do his job in 2018 when there was a taper tantrum, then in 2021 and right on into 2022 as well, refusing to do his job. Really, it seems pretty clear that he just lacks integrity. Now, why is this so bad, you might say? They are at least finally raising rates, right? Well, yes, but the real interest rates, i.e. in comparison to the levels of inflation that we're seeing in the economy, are actually getting lower each month, not higher at this point. First of all, it's important to note that we're talking about the Fed's doctored CPI figures. We've spoken about this so much in the past, but the Federal Reserve and the Bureau of Labor Statistics use things like owner equivalence rent to keep inflation artificially low. Right now, actually, inflation is above 10%, probably hovering at around about 11%, not 8%. Nonetheless, even if we use the Fed's doctored CPI data, we still see that interest rates are actually falling every month, not rising. Last month, CPI was 7.5% with 0% interest rates, so real interest rates were actually negative 7.5%. This month, inflation is 7.8%, but interest rates are 0.25%, so real interest rates are actually negative 7.55%. Interest rates right now today are lower than they were last month, and that's as inflation is rising, and that is frankly ridiculous. To put things into perspective very quickly, the last time inflation was this bad, over 40 years ago, interest rates were 18%. They are right now still practically zero. This is absolutely pathetic by the Fed. Personally, I don't understand why there isn't rioting in the streets over this inflation. The government is stealing from every single American citizen, and I know you guys watching this video care, but 99% of the people in America just don't care about it, or they don't even know whose fault it is. They all think it's down to Putin. Now, this does bring me on to the actual purpose of the Federal Reserve. Their mandate is low unemployment and stable prices. Basically, help keep people in jobs and keep inflation low. But the Federal Reserve has for at least a year now refused to actually act on that low inflation mandate. They are just ignoring it, pretending it doesn't exist, and for one major reason. There is a secret mandate by the Federal Reserve that they will not talk about, and that is to keep asset prices high, and they do this to keep the wealthy and the politicians and themselves rich. That is the real aim here. They are not hiking interest rates as high as they need to be because they do not care that the poor are being stolen from. They only care that they keep their stock portfolios high, and hiking interest rates to where they should be would tank asset prices. This is corruption, don't get it twisted, it is immoral as well and fundamentally wrong. The markets love it because the Fed and Powell are telling them that they aren't going to hurt them for the sake of the people of America. They are instead going to let inflation reign super high for as long as necessary, as long as it can make them rich. So investors are buying right into the markets and sending asset prices soaring. This is pretty atrocious behavior. It's absolutely shameful, but not surprising. We've been talking about this on this channel for almost a year now. We've been saying it for months. This is who the Fed are. This is their intention. They just keep proving us right. Frankly, if I were American, I would be rioting in the street over this, but I'm not you. I'm not getting hurt by this. I don't use American dollars. This doesn't make me any poorer, but it does make hundreds of millions of others poorer every day, and that is fundamentally wrong. Now, if you are investing on this news, I urge you to just be careful. Right now, the Fed is trying to keep asset prices high, but they don't have all the power in the world. There will come a time where they lose control, and markets will tank as that happens. Maybe the trigger will be an escalation of the war in Ukraine. Maybe it will be the defaults of tens of Chinese banks that will come in time. Maybe it will be a recession in the US itself. We don't know what that trigger will be, but we do know it's coming, and so I just urge you to pay attention, to be cautious, and don't get carried away. Now, just one final thing before we sign off for today. Make sure to check out the two other Stoic channels, the politics and the crypto one down below. Both are going to be kicking off full speed in no time at all, so make sure to subscribe to them to make sure you don't miss out when those videos start going live. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy and Basquiat, which can be a great way to diversify your portfolio with non-market correlated assets that aren't manipulated by the Fed. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.